Good evening, and thank you for joining us for tonight's home buying webinar. My name is Jaime Donias, Valley Strong Credit Union, and I'm joined by Craig McMahon from McMahon Real Estate and Robin Potter, Director of the Home Loan Center at Valley Strong. Before we begin, I'd like to cover some housekeeping items. We plan to answer a few questions from our audience. To submit a question, please click on the Q&A button on the bottom of your screen. We will answer as many questions as we can live, and if you feel your question has not been answered through the presentation, please fill out the survey after the webinar and supply your contact information. Someone will reach out to you directly to answer your question. Some questions may be more appropriate to be discussed at an appointment. If this is the case, we will respond to you with our contact information, and we will dismiss your question. We have a lot of information to cover tonight, so I'm going to turn my video off now and we can focus on the presentation. And I will begin by introducing our speakers. Robin has been with Valley Strong Credit Union for 5 years, where she serves as Director of the Home Loan Center. Robin is a true expert in the field, having been in real estate lending for the last 44 years. Originally from Anaheim, California, Robin has lived in Bakersfield for the last 37 years. She and her husband have 6 children and 8 grandchildren. Craig is celebrating his 27th year in real estate business this year. He comes from a family of real estate professionals. His father has been a real estate broker for 45 years, and his mother was a certified escrow officer for 33 years prior to retiring. Craig purchased his first investment property at the age of 18 and got his real estate license shortly after it closed. Craig is very involved in the local community and is very proud to call Bakersfield home. He and his wife both grew up in Bakersfield and attended local schools. They have 6 amazing children that keep him very busy. All right, let's get right to it. Robin and Craig, please take it away.
All right, thank you. Thank you everybody for joining us tonight. Glad you're here with us. Hey Craig, good to see you there.
Hey, hello.
So we're going to go ahead and just get started here. And here we go. Okay, I'm going to get it. And we're trying to move forward. All right, there we go. Okay, so first thing, you can see behind me, it says Valley Strong. We used to be Kern Schools Federal Credit Union. Recently had a name change this year at the beginning of the year. Still the same company, credit union that serves this community for the last over 80 years. And same DNA, we're a very service-related credit union and have many, many different ways that we can help you out as our members. So my goals for tonight are, both of our goals are for tonight to, you're here because you're thinking about buying a home. Why should I buy instead of rent? You know, a home is the largest financial asset most people in their whole life will ever have. But there's also other benefits to it. You have tax benefits to it, federal income tax benefits, and homeowners exemptions and things like that. I'm going to go back here. And sorry about the difficulties here. All right, so we're going to go back just a little bit. I want to go back over my goals again, just so you know kind of where we are in the things that we want to talk about. So what we're going to talk about is, how do I start? What's a pre-approval? What's pre-approval or pre-qualification? Are they the same? How do I get pre-approved? What's involved? What do I need to do to find a realtor? What does a realtor really do for me? What does a realtor do when you're looking, how do I find my new home? What is it like when we make an offer to purchase? What happens then? And then what happens throughout the transaction and you close escrow? So we're going to go through all of those steps as we move on through our webinar here tonight, or our seminar, excuse me. So one of the things that we want to talk about, and you'll hear this a lot, you hear the words used interchangeably, a pre-approval versus a pre-qualification. There's a big difference between them, and that's one of the things that Craig and I really want to talk to you a lot about tonight, about the importance of which one you choose. So we will talk about the first one, a pre-approval. A pre-approval is actually a formal application. It's where you're gonna go ahead and meet with a Valley Strong Credit Union loan officer, and what they're gonna do is they're going to obtain your social security number, your birth date. They're gonna check your credit. They're gonna ask you to provide proof of what your income is, what your assets are. They're gonna then talk to you about what are your down payment options. You're gonna determine what sales price meets the payment that fits your budget. And that's one of the things that we're going to talk a lot about tonight. And I'm just going to interject really quickly here. One of the things that I've had tons over the years, people will say to me, Robin, tell me what I'm pre-approved for. Tell me what I can qualify for. Actually, what we want you to understand, or one of my objectives tonight, is you need to tell us what you qualify for. We need to know, we need to structure these transactions, this new home purchase, so that it'll fit in your budget, so it'll meet your family's needs. Pardon me. And then once all of this is done and the loan officer has completed this application, they review all the income, they review your credit, your ability to repay the loan. They're actually going to provide you with a commitment from us, from our home loan center, that says that we're committed to make you a loan in order to purchase a home for that price range that you're in. A pre-qualification is something that's completely different. It's something that you might do online. It could be just by calling a certain number, something that you've heard in an advertisement that's on the radio, on television, on the internet. As far as that goes, it's just a very, very informal meeting. And the person that you'll be talking to, they could be a loan officer, but what they're also doing is they're going to just take your word for, well, tell me how much you make and tell me what your debts are. And
could I add to that, Robin?
Sure.
Every week we get offers in our office on listings that we have on the market for sale. And we see a lot of pre-qualification letters, and everyone out there knows somebody or has heard the horror stories, in our current, market in Bakersfield, having to make multiple offers and they can't get their offers accepted.
Right.
And not having that pre-approval letter is probably the biggest reason as to why they're not getting their offers accepted. Again, we get multiple offers on a listing. Maybe 2 or 3 will be a pre-approval where those credits been ran, assets, everything's been looked at, and they have a formal approval versus the pre-qualification that can just be done over the telephone. And someone that submits an offer with a pre-qualification letter, they go to the back of the line. And we want to work with buyers, and representing our sellers that can actually get a loan. And that's what that pre-approval is all about. So I think the most important thing everyone can take away from tonight's webinar is this pre-approval is just paramount in being successful in getting your offer accepted and getting the home, that of your dreams that you really work hard for your family to obtain. And that approval letter is most definitely the place to start.
It is, and thanks for bringing that up, Craig. It really is a commitment from us to all the parties that are involved. It's not just you as a home buyer, but it's to the agents, to the realtors,
Sure.
to the seller, so that everybody knows.
As an example, we get offers accepted often where we don't even have the highest offer, representing a buyer. But because we have that pre-approval letter, and when I present offers to the other brokers representing sellers in Bakersfield, we review that with them and let them know that all the assets have been checked. These are what the FICO scores are. This is where we're at. You accept this offer and you sold the house, and that is just gold in the market that we're currently in. It puts you ahead of the competition, and is where, as a new buyer entering this market, is extremely important that be obtained before making an offer.
I know. Thank you. Thanks. I really appreciate that. Okay, so we'll just move on here. Here we go. All right. So what happens when you meet with a mortgage loan officer? What should you expect? Well, basically what they're going to look for is for you to bring proof of income. And proof of income can be a few different things. If you are a regular wage earner, you have, if you're W-2 income, they're going to look for proof of what that income is. So we'll look for your pay stubs covering the last 30 days and your last 2 years W-2 forms. Don't need your tax returns, just need your W-2 forms. On the other hand, if you're self-employed, we skipped ahead here. Hang on one second. Okay, I'm moving forward. We're backing up for just a minute. Sorry. Thanks for hanging in there with me. So if you're self-employed or you're retired, we're going to look for your current retirement statements. And if you're self-employed, we're also going to need your last 2 years of filed federal tax returns. There is, due to the pandemic, there are some new regulations that are in place. If you're self-employed, we're also going to need a current profit and loss statement through the current month and your business banking statements that support the income that you're showing on your profit and loss statement. We're going to ask you to bring your last 2 months of bank statements so that we can see that you have the money to close, whether it's going to be for your down payment, closing costs, all of it. We're going to check your credit. That's through that application that the loan officer is going to fill out. We're going to go over your down payment options, and we're going to talk about what works best with your asset situation, with the amount of money that you have saved, and see what works best for you. Because sometimes not always the lowest down payment means the best loan product for you. And we'll talk about that in just a little bit. Pardon me. So there's lots of different loan programs that we'll go over with you, and they can go from a very low down payment through FHA or VA. We have conventional financing, and we have some down payment assistance programs that can help you. So we'll go through all of that with you and give you the options so that you can make your best choices for your family. After that has all happened, and it's pretty much simultaneous, you're going to receive that pre-approval commitment from your Valley Strong Credit Union loan officer. So one of the things I want to bring up, if you're not with Valley Strong and you're not doing that pre-approval with them, I need you to understand, as a consumer, a pre-approval should never cost you anything. There is never a fee for that. So if someone is asking you to give money, whether it's because they're going to check your credit or whatever it is, stop right there. And you want to search out somebody who is going to do this as a free service to you. Okay, and we're going to move on here. Do we have any questions?
Robin, very good information. And yes, we've received a few questions actually. First one, will the lender use my employment if I've only been on the job for 1.5 years?
Pardon me, that's a really good question. So there's variables to that. Basically, we're looking for a 2-year history of work, but that's not in stone because it depends. If you were a student, if you were in college previously and you were studying and now you have graduated from college, I'll back that up just a little bit here. If you have graduated from college, ready to use your degree, and you've been on your job that is in the same line of work as your degree, then we're going to go ahead and count your college time as that 2-year work history. The other thing is, we're looking for a history of income. We're looking for a stream, because the bottom line is what we're trying to figure out is, do you have the ability to repay the loan? That's how we're going to make that commitment to you.
Very good. One of our viewers wants to know, what's the difference between a pre-approval and a pre-qualification?
Okay, good. Well, that's something that we just talked about. And basically what it is, and Craig really summarized it, the kind of long story short is a pre-approval is a formal process where you are made assurances because there are verifications that are being done. A pre-qualification is a very informal process. Nothing is checked. Your credit's not checked. Your assets aren't checked. Your we're going to call it debt to income ratio is not checked. There's a lot of things that don't happen there. And as Craig was talking about, it's really, really important if you're very, very serious about making that offer to purchase that home, you want to make sure you've taken the steps, become pre-approved, and so that you have the commitment of Valley Strong Credit Union behind you to be able to close that transaction successfully.
We have more employment questions, believe it or not.
Yeah.
One of them being, how will the pandemic play into the decision about employment?
Well, it depends. And that actually, that's a really timely, good question. And I'll tell you why. We have a lot of this state that are unemployment. We cannot use unemployment income as a qualifiable income. We have to know that there has to be a probability of a continuance of the income that you have for a 3-year period. So if you're in a regular job and you're in a 40-hour-a-week job, you have your W-2s, you have your pay stubs, and we can develop that and see that income stream, we know that the likelihood is going to continue with your employment. So we get this quite a bit. We have people that say, well, I'm working and I'm furloughed now, and so I'm on unemployment, and I want to go ahead and buy, get pre-approved so that I can buy this home. The problem with that is that there is no probability of continuance of those unemployment benefits, and there is no guarantee that you'll go back to your position. So it's really unfortunate. That is a big effect that we're having with the pandemic.
Okay. Now, will my rate be lower if I have good credit? And then what FICO score model does Valley Strong use?
What FICO score model do we use? You're kind of catching me here. I think we use, pardon me, I'm going to say I'm thinking it's, I don't know exactly which number it is. I believe it's 4 or 8. Sorry, I don't have that information with me. We can look that up for you. But basically what your FICO score is a representation of the 3 credit bureaus that we use. We use Experian, TransUnion, and Equifax. Each of those bureaus has their own model and gives you a representative score. So you then have 3 scores. The middle of those 3 scores becomes your representative score or your FICO score for the transaction. Now, to answer the other part of the question about will my, and help me out here, Jaime, if I'm paraphrasing this wrong, will my rate be lower because of my credit score? I apologize.
Yes, so will my rate be lower if I have good credit?
Understand. Okay, well, what's really unique about credit unions is we're pretty equal opportunity. In the context of a home loan, what affects, our rates are the same for everybody. Your credit score affects your closing costs. You'll hear about, pardon me, you'll hear about discount points. Discount points or points are assessed in a transaction or in a loan application based on the different attributes. It could be because you are putting a low amount of money down, you might have a discount point that's associated with that. Because your credit score is lower, then you might have discount points that are associated with that. You may have no discount points if your credit score is higher. Basically, what discount points are is they're a fee that are assessed to that application based on risk, the risk in the file that the lender, the credit union, is taking to lend that money to you.
All righty. And then the last one for this section, it's been 2 years after a Chapter 7 bankruptcy. Can I qualify for a home loan?
Unfortunately, not at this time. So the regulations that we underwrite by are you have to, well, at 2 years, you still cannot. So with FHA, you can be 3 years past a Chapter 7 with conventional financing or Fannie Mae. That's what you'll hear it called sometimes. That is a 4-year period, and it has to be 4 years or 3 years from the date of the discharge of the bankruptcy.
Okay, that's all we have. You know what? We do have one more on pre-approval that just came through. Do we need to schedule an appointment for the pre-approval?
Actually, at this time we do, and I'm going to circle back to the pandemic. One of the things that we are dealing with the pandemic is it's hard for us to take a face-to-face application. So we want to invite you. We'll give you all the information to call into our home loan center. We'll set an appointment. We do not have the ability to just take walk-in appointments at this time. So what we want to do is make sure that your experience is the best it can be. Scheduling an appointment is absolutely the best way that you can go with this. You can call in. We'll have a loan officer call you at an arranged time and walk you through that pre-approval process.
Okay. And then how much on-hand cash is needed to even consider starting this process? They understand that there will be some kind of out-of-pocket cost.
That is, it's really hard to say that because, or to give you an estimate or a guess on that, because it varies depending on what kind of loan program you're choosing. So FHA costs are going to be different than VA costs are, and they're going to be different than conventional loan costs are. So to be able to, I can't really just say it's X percent as far as that goes. It also depends on the amount of money that you're borrowing, or the sales price that you're looking to or the price that you're looking to buy at. Some of the fees that are involved in the transaction, it's not just lender fees, it's the escrow fees, it could be an appraisal fee. They can change based on the amount. So an appraisal.
I'm going to interrupt you real quick, Robin. But one of the things to help, the buyers that are out there that are considering purchasing a home, and in terms of the cost of the financing, we're also very successful in getting sellers to participate and help cover buyers' closing costs as well. So we can really minimize those costs, but it really is broken down. It's going to be different for everybody because they're all depends on the loan program, as Robin spoke. FHA's 3.5% down payment. Conventional, they're kind of all over the place with as far as the down payment is concerned. But the closing costs themselves, we can get the sellers to help and absorb some of those costs.
And that's a really good point. The other thing, though, at your pre-approval appointment, you'll be given a complete breakdown of what all costs would be as far as that goes for that transaction.
All right, so that is it for questions for this segment. Let's continue on with the presentation.
All right, sounds good. Thanks. Thank you, Jaime.
Mm-hmm.
Okay. So this is kind of my segue to Craig. He's got a good part of this webinar tonight because it's really important to me as a lender that you are looking for somebody who's going to be the right representation for you. So some of the things that I think are really important is that you want to look for somebody that has a lot of experience in the area or the market that, hang on one second here. We're going to go back. And here we go. Sorry. Thanks for hanging in. When Craig and I are doing this live, I usually at this point is when I hand him the clicker, right, Craig? Because I seem to always mess this up. Anyway, so anyway, they should be able to talk to you about the market that you want to buy in. They should be able to analyze your wants and your needs. What's important? They should be able to ask you the right question. They're going to show you homes that fit your criteria. It's not what fits their criteria or what they think you should do. They want to know what's important to you because you're going to be living there. They're going to be that person that's your champion. They're going to negotiate on your behalf. And I just got to drop this in here right now. This is one of the reasons that Craig McMahon is a preferred realtor of Valley Strong Credit Union, is because when I was writing this, I was just sitting here thinking about him. What does he do? What does he bring? He is going to be that person that is your champion. The realtor is also, your realtor is also going to talk to you about what kind of costs are involved. But the most important question is, do you owe him any money to be your realtor? How much does that service, his service, cost to you? As a buyer, it costs you nothing. The seller pays for his commission in this transaction. He's also going to coordinate all the work that is needed with the other professionals that are involved. There's many different professionals in a real estate transaction. There's escrow, there's title, there's inspectors, home inspectors, termite inspectors, there's appraisers, a lot of people. He's going to coordinate all of that for you. He reviews all the paperwork, and he'll talk to you a little bit about how, once we get into talking about making an offer, it's kind of an arduous process or a big process for the realtor, because the standardized contract for the state of California has a lot to it, and I know Craig will talk about that as well as we're going on here. But the other thing that is most important is, well, two most important, that's my last two bullet points here. They're going to solve any problems that arise. Sometimes that's through renegotiation, but a lot of that comes through education and understanding about the hurdles that might be coming up. And you're only going to find that with an experienced realtor as far as that goes. And most importantly is availability to take your calls, your texts, and your emails. So anyway, I'm going to turn this over to Craig. You're going to be in really good hands here. I appreciate you guys listening to and reading through our points about that pre-approval process. And this is really just an introductory seminar. What we want to do is encourage you to contact us and ask us more about what is involved as far as that goes. So Craig, I'll hand it over to you.
Fantastic. I want to thank everybody for taking the time to get some information tonight and get started in the right direction. Going back to what Robin was just explaining in looking for a realtor, I personally believe that the most important is, just like if you're going to have a medical procedure or something, you want someone that knows what they're doing. You want someone that's got the experience, that's going to get the job done for you. Again, the beginning of the presentation, Robin mentioned, for most everyone in this webinar tonight, this is the largest, financial decision probably ever made, and you can't make a mistake. You can't have any regrets moving forward. And having an experienced realtor that lives and breathes the business 24 hours a day, 7 days a week. There's a lot of people in the business that are part-time. There's a lot of people in the business that are just that are represented, that only represent family members. Everybody's got a cousin of a family member somewhere down the line that knows or thinks they know what they're doing. And again, going back to the very beginning, we'll do that approval process of having the approval letter and an experienced realtor are going to give you the success that you all are looking for in this market that we're in. And we're in such a wild and crazy market where there's just so many more buyers looking in our market than there are homes available. So you've got to do your homework and put yourself in a position to be successful. So moving forward, in starting to break the realtor down with what, knowing exactly what you're looking for in terms of the neighborhood that you want to live in, school districts, you want to keep the kids in the same schools. You just want to break down all your wants and needs to come up with, a property that is going to suit your needs for your family. And one of the things that I do differently than most of my competition out there is, after looking at properties, say you have 2 or 3 properties that you're very, very serious about, you're going to purchase one of these 3 homes, and I break them down what's called a comparative market analysis, a CMA. It's basically the exact same thing that an appraiser does, where we check what's happening in the neighborhood, average time on the market, price per square foot, lot size, any upgrades in the house. And I put that information in your hands to help you make that decision. So you'll know exactly what that market value is for that property. You know, a lot of people probably wonder, you know, well, where do you come up with the price? What do we offer? And that's what we use, and it helps in negotiation. You know, a lot of properties on the market that are very extremely overpriced for the market and for what's out there. And when we run those CMAs, we know exactly where we stand, and put that information in the buyer's hands to help them, you know, make an educated, you know, decision on the offer that they want to make.
Good deal.
Good.
All right.
There we go. Once we identify a house and made the decision, we've reviewed the CMA, and again, I'm there every step along the way to help and put this information together, from, you know, current active properties on the market, current pendings to solds. So to put the best offer we possibly can. Again, the very first step is having that approval letter to submit with the offer that we write.
Mhm.
But again, any contingencies and conditions that are in a purchase an offer to purchase, which are, we have normally the state of California, the way that the forms are written, 17 days to do, you know, any and all inspections that the buyer may choose to do, from obviously an appraisal, home inspection, termite inspection, I mean, a roof inspection, plumbing, anything you possibly can think of. We get all of those things done in that time period. If there's anything found of any consequence that would require us to go back to the seller and say, hey, to proceed for us to purchase this home, we're going to have to make these repairs to make this happen. And it's very, very common to you know, negotiate those things just prior to the closing. And the sellers want to sell. They definitely want to sell, and the buyers also, you know, they want to move into a house they know that they can live in and not have any concerns of any major issues. Another thing that is very, very important to have in place when making an offer is a home warranty. And that covers the house and all the electrical, plumbing, basically everything within the perimeter of the foundation, with the exception of the roof, be covered with those home warranties. And we always write those in and ask the sellers to pay for those for our clients. The closing costs, are we going to ask the seller to help and pay closing costs? Can be anywhere from, you know, I would say just a kind of a standard number that I see often is 3%. You know, so $200,000 house, you're looking at, you know, $6,000 in closing costs, or what we, you know, $200,000 to $300,000 house. That's what we're looking at in terms of the closing costs. Participation from the sellers to help. And we have to check those CMAs to make sure that the numbers fall in place where, you know, we're not overpaying for the property, but also able to get the closing costs picked up by the sellers. The offers that are, once they're presented to the buyer or to the sellers, excuse me, usually they have 2 to 3 days after the offer is submitted to respond to the offer. The offers aren't good indefinitely. I always like to put an expiration date on them so that, you know, we can get an answer. If it's not going to be that property, we definitely want to move on to the next one. And the offer is either accepted the way it was written and the escrow is open. The sellers can counter offer, where they say, no, we won't take this price, but we'll take this price if you want to buy the home. And the other is just the decline of the offer, or rejection of the offer, is the formal term that's in the purchase contract.
All right, so it's accepted.
Yes. Now we do the happy dance when I get the phone call that the deal's accepted. And then once you get to that place, the offer has been accepted. We get the purchase contract to the lender, to Valley Strong. They get that process started on the financing. We actually have a property to work on. And we start the inspection process. We get everything ordered. We get the appraisal ordered. And I help coordinate all of those things to be done in a timely manner and under the terms of the contract. Once we get through the inspections, Valley Strong sends the loan documents, which are your final loan papers, to the escrow company. And you'd go in to sit down with the notary to fill out and sign those final loan documents, which one of the things that I appreciate so much about Valley Strong and the staff there is there are no surprises. You get all those costs right up front, and you know exactly what your payment's going to be, what your interest rate's going to be, what the closing costs are going to be, and you know exactly what you're looking at from start to finish. And as you know, it makes my job that much easier having that team and staff at Valley Strong to give me the confidence in that my buyers, their fees aren't going to change. And a lot of other places in town, mortgage companies, that happens often, where what people think they were going to be paying, what their payment was going to be, is not what they see when they go to sign those final loan documents. So that's one thing that is just so paramount again and huge in having that pre-approval letter up front. So once everything's done, we would do a final inspection and walkthrough of the house to make sure that it's in the same condition that it was in when the offer was made. As an example, in the summertime, people get a deal accepted, they'll accept the buyer's offer, then they go turn the water off. So the sprinklers that aren't working, they fire the pool cleaning guy, the pool's not being cleaned. So one of the things, the way I write my offers is that the property is to be and stay in the same condition it's in when the offer is made. It's expected to be in that exact condition at closing. People will fire the gardeners. So, there's a lot of things that, with the way the offers are written and presented to protect you as the buyer, to see to it that you're getting what you paid for. And at the very end, after the walkthrough is completed and we sign off and say, yep, let's do this thing, let's fund the loan, I contact Valley Strong, let them know everything is a go. We have a green light, and they make arrangements to wire the money to the escrow company, where the money for the loan is sent to escrow. And at that time, there's nothing for anybody can mess up at that time and slow us down. And then we're just waiting for an electronic transfer from the escrow company to the Kern County Recorder's Office, where the deed is recorded in your name. And when that's done, you officially own the property. And then we get the phone call that we are of record, which means that the escrow has closed and you are now a happy homeowner. And I get the privilege to make the phone call to congratulate my buyers on a successful transaction.
That's pretty fun. And I got to tell you, it's really exciting on my side when I get to call you and say, we're done.
Oh, yeah. Yeah.
So it's really nice. It's a great time. It's a great opportunity for all parties that are involved.
Mm-hmm.
So thank you, Craig. Here's some information for you guys about him. And there's his website, his phone number. And he's a great resource if ever you have any questions at all. And like I said, just a really, really great resource to talk to.
Yeah, please reach out. If you have any questions, feel free to give me a call or fire me an email, and I'd be happy to answer any questions anybody has.
All right, good. So Jaime, do we have any questions so far? We're kind of winding down here.
Yes, we have plenty of questions that come in. One of them being, does Valley Strong finance properties outside of California?
At this time, we do not. We are a state charter and we are geographically bound to the state of California. There could be some time in the future, but not the near future, where we will be able to have lending authority outside of California.
Okay. If let's see, if a married couple applies, whose credit score do they use?
Actually, that's a really good question. So when you apply for the loan, earlier I was talking about how we look at each applicant, and there is a credit score that is derived or that is created, that representative FICO score that applies to each applicant or each person that is applying for the loan. So basically, the way your credit score is determined to be the representative score for your application, which has to do with discount points that I was talking about before, pardon me, is It could be either the husband or the wife. So what we do is each person has 3 representative scores. And then we use the middle of the 3 for each person. Then the lower of the 2 scores becomes the application representative credit score.
Is there an ability to get a loan for a lot and to build a home on it?
There is actually. we didn't put that on our list of what we have. These are fairly new programs with Valley Strong Credit Union. We offer lot loans for residential lots. We do not do any lot loans or any land loans at this time for undeveloped property as far as that goes. And we do offer a one-time close, a construction loan, where you would be working directly with an approved Valley Strong builder to build a custom home.
Good. Now, if the appraised amount of a home is less than the selling price, who pays the difference?
Well,
Go ahead. You go ahead.
Because that was going to be my segue to you, Craig. So one of the things, first thing we do is we're going to notify your realtor and you as the buyer when the appraisal comes in, what the derived value is or what the value is that came in on the report. If there's a difference between that and the sales price, that's where when I was talking about as a realtor, Craig's going to be your champion. That's where he goes back to negotiation. And so now I'm going to kind of let you talk about that, Craig, about what's involved there.
Yeah, well, it in the market that we're in right now, it's becoming a rarity that be the case. And having that CMA that I mentioned in the very beginning, again, that's exactly the same information that the appraisers are going to put together when they get do the appraisal. But in the event that does happen, we have one of 3 things that's going to happen. It's either the seller's either going to lower their price to that appraised value. You meet somewhere in the middle with the between the seller and the buyer, or the buyer pay the difference in cash. And I guess the other option is you have no deal. That's the other option is the deal's off completely. But that very rarely happens. We're able to negotiate some kind of an agreement that both the buyer and seller agree upon that works. And in the event that the buyer is not in a position to meet in the middle, then it's made very clear to the seller in that negotiation, in that situation, that the only option for the deal to continue is for the seller to lower their price to that appraised value.
Mm-hmm.
Yeah.
All right. How soon should I start the application process if I want to buy a home in the next couple of years?
In the next couple of years? Is that what you said, Jaime?
Yes.
Okay. What you want to do is your application or this pre-approval process is good for a period of about 60 days. If you're not clear on what your financial status looks like right now, what your credit looks like, do I qualify, what's my debt to income ratio, is Valley Strong going to be able to make a loan for me? You can start that right now, but know that everything will have to be updated once you get a lot closer to wanting to be out and looking to make an offer and really select a home and get into escrow on it. Some of both Craig and I throughout the years have had several families that have come to us kind of in that situation that I was just talking about, where they weren't really clear. They didn't really know. They might have a few hiccups or hurdles in their lives that they're dealing with. And at that point, we give them a game plan. We look at everything. We go through that same exact pre-approval process where all of that analyzation is done and say, well, we might need to work on this here or work on this here, or you're going to need to save a little bit more money here, and help them with a game plan so that maybe in a couple of years, they are going to be ready to buy that home.
Yeah, we often get clients that can't purchase right away, that aren't in a position to purchase financing wise. But again, just as Robin mentioned, we're able to put a game plan together where we'll be able to tell you when you can. That's most important. wanting to take advantage of these interest rates. What the interest rates are going to be 2 years from now is a question mark, but we solidly believe that the interest rates are going to stay strong for at least another year. And that being the case, you might find out that maybe you can do it in a year, maybe you can do it in a year and a half. But we'll be able to put a game plan together and be able to tell you exactly what you have to do and how long it's going to take. And it's very, very important to do that.
Okay. A viewer wants to know, I do not have a realtor. Can I just use the seller's realtor?
It's most definitely, an option for you to just call the number on the sign. You're looking for someone that has 100% your best interest at heart from negotiation of the offer to get you the best possible deal, and then showing you the true numbers of that CMA, that comparative market analysis of what exactly is happening in this neighborhood. And I have often represented both the buyer and seller. It's not that uncommon, but you just have to make that personal choice or preference of do you want to be represented by someone solely working for you, or someone representing both sides, both the buyer and the seller.
Okay, and this might fall into the same, but it says, do I need a realtor if the home is in the family available for purchase that we're trying?
No, this is not coming from a salesman perspective whatsoever, but you just want to be sure. There's the state of California has so many regulations. And when I started in this business, a purchase contract was 6 pages long. Now I think I end up with 20 pages to just make an offer on a piece of property. There's so many regulations and state laws in place, regardless if you're selling your home or buying a home of a family member. Those guidelines and regulations are still need to be in place. So having somebody that knows the paperwork, knows the ins and outs, has a relationship with a title company that can get you a title policy to make sure there aren't any mistakes made, regardless of it being a family transaction. You want to be sure that it's done properly.
Okay.
And I'm sorry, let me just add to this too. Oftentimes I've seen throughout the years, transactions between family members, and not to put it down, because usually it's a great opportunity for all parties involved. But you want to make sure, just like Craig's saying, there are certain representations. This is still a big financial investment for you as a purchaser. And you want to make sure that all the I's are dotted and the T's are crossed, and that you are doing your due diligence, that you're taking the steps that you need to take. Is the home being inspected? Are you not bypassing things just because it's a family member? And that's why you want to have the advice of your realtor involved in that transaction.
In addition to that, I'm sitting here thinking about it, is, another thing is in terms of, the fees and everything that would be involved. I mean, a realtor should be able to reduce those fees substantially, because there aren't going to be a lot of marketing, not going to be a lot of marketing money that real estate agent and broker are going to have to spend to find a buyer for that property. So the costs would be minimalized to make it happen and make sense for both family members. Also, if it is a family deal like that, to do it as inexpensively as possible, and again, money can be saved because there's not a lot of marketing or time that needs to be spent to make it happen.
Good point.
All right. Any prediction on where the market is headed? Is it a buyer's market or a seller's market?
I tell you, the market in Bakersfield right now, again, we just have a supply and demand issue with for multiple reasons. One is the pandemic that we're all involved in. We lost a huge percentage of our inventory when that broke in March. Was it March or April that had happened? And people just weren't comfortable having their homes on the market. In addition to that, the state of California, Cal OSHA, got heavily involved for the first time in my career or ever for my understanding, where we have, as I have more paperwork, COVID required paperwork just to go look at property than paperwork I get signed when I list a property on the market for sale with a seller. So the pandemic hurt us as far as our inventory is concerned. And the other, we're in an election year, where a lot of people are wanting to see what's going to happen after the election before they list their homes for sale or not. But you know what doesn't change regardless of the market in terms of the deals to be had. I call them life events. My life event that happened in my life in the last couple of years was I found out I was going to have, my wife and I were having twins, and that changed everything. You know, our house was too small, our car was too small, and we had to move. You know, there's a tremendous amount of people leaving the state of California. The oil industry, a lot of people leaving Bakersfield, heading to other parts of the country. And at the same time, we have a tremendous number of people coming to Bakersfield from Southern California, from Northern California, where they've just been priced out of the housing market completely. So it's about a wash with the people leaving to the people coming in. But as of right now, I think we're in a seller's market. But until we're able to put more inventory out there where there are more homes for sale, you know, it's going to be a while before we see it being a buyer's market again.
Yeah, good point.
And do you see any of that pricing fluctuating or pretty much staying steady at this point?
At this point, I think our prices are probably going to stay steady. That's what we're seeing. That's the trend that we're seeing. You know, our average price per square foot has just been kind of creeping up as we've gone. I think a year ago we were around $148 or $50 per square foot on average. There's some parts of Bakersfield that are close to $200 a square foot. But every neighborhood is different. All of the comparables, you know, they change daily. There's always new inventory coming on the market. There are always properties closing escrow. So it's again, it's just so very, very important that you have someone representing you that knows the ropes, that can keep you educated on exactly what this market is doing and where it's headed. But I see stability as far as the prices are concerned. The rates are going to hold, but just can't wait for us to get some inventory back.
All righty. Now, Robin, we have a question for you. It has to do with, again, employment. We have a viewer that works for the union, and they're, I guess, they're back and forth, I guess, with employment with them every couple of months. But they've been with the union for 4 years. How does that play with income?
Okay, that's a really good question too. I like to hear about that, or hear these type of questions, because basically, just to kind of circle back a little bit, what we're looking for is to be able to figure out what your income stream is. It doesn't matter that you've been on that particular job site for 4 months, because your union's going to send you to the different jobs that are available for you, and some may pay better wages than the others. So what we do as a lender is we're going to look at what your income stream has been for the previous 2 years. We're going to look at all of your W-2s, and what we do is we average, and we look at the total of that and then divide it into a monthly figure, and that then becomes your representative or your qualifying income for the transaction.
All righty. Now, a viewer says or asks, can my dad help me with a cosign for a home?
Of course. We love parents.
Easy.
They can. The only thing that we talk to the parents about is the understanding that when they co-sign for you, that obligation is their obligation as well. And so we kind of want to make sure that it's working within the family, that, you know, and find out where, what the long and the short-term range goals or short-term goals are as far as that goes. And the reason I'm saying that is if your folks are going to co-sign with you, but they're looking to go and buy a new home themselves, or maybe a new car or something like that in the next 6 months, that new house, your new housing payment has to be counted in their debt for qualifying, because there's not a lengthy enough period of time to be able to prove that you've been making that house payment. So something that you want to keep in mind, but it is certainly always an option. We see it all the time where somebody's just starting out, needs a little bit of help. They know they can make the payment. Maybe there's some part of their income that we can't use in qualifying. So parents will step in and offer their financial status to help that transaction be completed.
Robin, I know you mentioned this before, but someone asked, can you go back and mention what type of loans Valley Strong offers?
What type of loans do we offer?
Yes.
Yes, we have all different kinds of loans as far as it goes. We offer FHA, we offer VA. With the FHA and VA loans, we are also able to offer some down payment assistance. We have regular conventional loans. We offer jumbo financing, which is for any loan amount over $510,000. We have special financing for that. We offer a 30-year term. We have fixed rate mortgages. We have adjustable rate mortgages. We offer loans on manufactured homes. We do loans for lot loans if you're interested in purchasing a piece of dirt. And like I said, a residential lot that's already been developed. We have one-time close loans, and we also offer equity loans. It doesn't really fit in the context of this webinar tonight, but if you already own your home, we have different products where you can utilize the equity in your home to either complete a home improvement project, maybe consolidate some debt. So we have really a big variety of the type of loans that we do offer.
Okay, and then this question is actually for both of you. I think there's different aspects to it, but what are your concerns with buying a foreclosure property, or should a first-time buyer stay away from those types of properties?
You know, I think I'm gonna, and I'll tell you why. I think I'm gonna let Craig talk about this a little bit. And the reason why is, from my side of the desk as a lender, making that loan for you as the consumer, as the buyer, is the same process every time. It's more about the process of working in a foreclosure transaction with the bank. And Craig, this is where I'm going to kind of let you take this over, because
Sure.
you have a lot of experience in this.
Yeah, we sell a lot of bank-owned properties, and just to be very honest about that whole process is they sell those properties at market value. The only properties, the misconception, the shows that you see on TV at 3 o'clock in the morning where you can buy real estate with no money and everybody flies in a helicopter and rides in a yacht after getting involved in these kinds of properties. But very honestly, they are sold at market value. A CMA is ran. I'm contacted by these banks. They want to know what these properties are worth. It's called a BPO, a broker price opinion, and I do those often and submit those to the banks to give them an idea of what the true market value is. And the real estate professionals are offered bonuses to sell those properties. Brokers will make more money selling you a foreclosed property than they would if they were to find you just a regular home that's on the market for sale. And my advice is to steer clear of them. The deals that are out there, the properties that don't sell are usually because you can't get financing. The properties are in disrepair. They need a roof. All the appliances have been stolen. The property, there's major damage where, one of the things with the condition of these properties, they have to meet a minimum requirement or the banks won't give you a loan. FHA has very strict guidelines. Conventional financing has very strict guidelines in the condition the property has to be in. And a lot of these foreclosed properties don't meet that requirement. So the deals that are out there, you're then competing and dealing with investors that are paying cash. And if you have to finance, if you're making an offer based on financing with a minimal down payment, you're competing against, again, investors that are paying cash, and the banks will lean towards those cash offers every single time over a finance deal. But again, going forward, my advice is to steer clear of those properties if at all possible, and find someone that has experienced a life event in their life, like having twins or a divorce, loss of job, transferred. There are many reasons that happen on a daily basis that people, not only most people, with houses that are on the market for sale would like to sell them. And then we have houses out there that are people that have to sell them. And the deals to be had, you'll get, you get a much better deal for your money on someone that's experienced a life event than you're ever going to get from a foreclosure.
And Craig, don't those foreclosure transactions usually take a longer period of time to close?
Oh my goodness. Yeah,
a lot of paperwork and things like that.
It can take months. A lot of properties, they're not even been approved by the bank for a value, and they won't even consider it until an offer is submitted. It can take months. I mean, I've had deals take 5-6 months from start to finish to get them accomplished. And even when an offer is made, the bank can say, no, we won't take this price. We want $25,000 more. And just so much time and energy can be wasted on those over a long period of time. And the banks, they're very honestly just not in any hurry. It's all numbers to them. And, they're just, everything runs at a snail's pace.
All right. So if we're not looking into foreclosures, what about a first-time home buyer looking into new construction?
From a realtor standpoint, I represent buyers on a lot of new construction, and highly recommend that you be represented when looking at purchasing new construction, that you have a real estate professional represent you and have your best interest at heart. Again, it goes back to the same thing of just talking to the seller's agent or broker, number on the sign out in the yard. And going to new construction, it's the same kind of thing. They're trying to upsell you on upgrades in the property, from paint, flooring, you name it. And a lot of the builders on new construction are requiring like 50% of the upgrades up front before they even start to build the house.
Robin, a follow-up question to co-signing. It's actually on a parent co-signing. Is everything considered, such as income, credit score, etc.? If credit score is considered, is the one who has the strongest credit score considered in regards to rate?
No, it's always the lowest representative score. Always. I kind of said that quickly, but that was a short answer. It's always the lowest representative score.
Okay, perfect.
Typically, when we see somebody come in and help, their score has no effect if the original applicant has a lower credit score. Usually when they're helping in that situation with co-signing, it has to do with debt to income ratio, making sure that they qualify for the payment.
Okay. And then I know we've mentioned this in the presentation, but typically how long is the process? So let's go over a typical application process. And then once they have the pre-approval, and assuming that they find the home and you start the paperwork, what's the process for that? And what's the length of time for that?
So how long does it take? Well, the actual pre-approval itself takes, and it's all about the presentation that you make to the loan officer. If you have your appointment with the loan officer and you don't have your pay stubs, and you don't have your W-2s, or you don't have your, if you have all of your information together with you, that pre-approval process is instantaneous. It should take no longer than 24 hours at the most, if there has to be some different analysis done on your income as far as that goes, which could be through a more complicated type of income, which would be reviewing tax returns if you're self-employed, excuse me, something like that. The The rest of the process is contingent upon, or not contingent, is based on the contract that your realtor writes. If Craig writes an offer for 30 days, we close in 30 days. We make sure that's part of our timing, working, and that's part of his timing, is working with us and you to make sure that all the inspections are done on time, everything's done in a timely basis so that you can meet that contractual period or that timeline that you set in your purchase to offer that home.
As an example from the real estate professional, a realtor's side of the fence on these on the deal like this would be, is the property vacant? If it's vacant, we don't have the seller needing to make arrangements to get moved out or find a place to live, so they can, a vacant property can be closed, normally much quicker than one that's occupied by a seller. It's often times when an offer is made that's occupied where that seller wants to close escrow at the same time. So you have to not only negotiate your own deal, but also be on top of what's happening on that seller's purchase so that both transactions can close at the same time. And my record is 5 deals tied together, contingent upon another, contingent upon another, contingent upon another. So you really want to have everything in place to make that happen, and the way the contracts are written with the timeframes for inspections, and just see to it that everything is done in a timely manner, and not only on your purchase, but also, since it is contingent, if it was contingent on that seller doing the same thing on their purchase, you would want to be on top of that as well, knowing when those dates are taking place and that those same items are being taken care of. So it's quite a bit of work. It's a lot more work than just a regular transaction, but we do them all the time.
Based on your experience, is it cheaper to build on a developed land, or is it always better to buy something that's already pre-built?
It's like buying, the best analogy I can give there would be like buying a car. You walk onto the lot and buy a car and drive off the lot, or in a new development, they have a base price for the house, which doesn't have any of the upgrades that most people put in. You buy the base price. If you buy a house at base price and don't put all the upgrades in that everyone else in the neighborhood did, you're going to buy your house anywhere from $40,000 to $65,000 less on average than everybody else in the neighborhood. Yet you still have that same square footage. Yes, the upgrades have some influence on that value, but over a period of time, most people that buy something that is already built, established, the neighborhood's established, the schools are established, the shopping centers, everything's in place. On your newer construction, sometimes you have what are called mellow roost taxes, which are bonds that are put in place to pay for the new schools and the new parks and shopping centers and infrastructure surrounding a neighborhood, and can really change your monthly mortgage payment in paying for those. Where if you buy in a development, an older home, that's those things have already been paid off, and you know exactly what you've got. A lot of times with new construction, you'll go into a development and they'll have a little map, a beautiful example of what the neighborhood's going to be. And the park's going to go here, and the school's going to go over there. And if people build a house, pick a lot, and they never see a park, and the school's delayed. They don't know when the school's going to be built. So there are advantages and disadvantages to both. I think it just comes down to personal preference of what you're looking for. But in terms of the deal and the investment side of things, I think you're better off on an existing home than building one from the ground up.
Okay. And then very quickly, can you go over what an escrow company does?
Sure. And I'll talk a little bit about it and then let Craig interject too. Basically, the escrow company is the uninterested third party in the transaction. So they are the keeper of, they interface or work with all parties. I don't want to say uninterested, that was probably not the right word, but they are an unbiased, that's the word I was looking for.
Neutral. Neutral third party.
Neutral, thank you. And they are there, they coordinate with both realtors, with the buyer, with the seller, with the lender, with the title company. They're coordinating to make sure that all the monies are handled properly, that everything is dispersed properly. They're drawing instructions that are in addition to your contract that are ensuring that you are getting free and clear title to that property. So they have many, many different functions. And I don't know, Craig, if you want to add to that, what do you think?
Yeah, just as Robin's explained, they're a neutral third party between buyer and seller. On the selling side, they gather the payoff for the existing loan. They do a background check for the buyer to make sure there aren't any additional loans, mechanics liens, anything in addition to what those people owe on the mortgage. There are not any lawsuits or anything on the property, because as a buyer, you want to be sure you're just buying the property. You're not buying any debt that's on that property.
Right.
So that's what that title insurance policy is for. That assures you that you, as Robin said, are purchasing the property with clear title. That you own that property and that property only. You're not buying anybody's debt. And in addition to the taxes, they prorate the taxes so that that seller pays for every day that they own that property, and you don't begin to pay property taxes on that property until the day that, it doesn't begin until the day that you own it. So they coordinate all those things, the payoffs, they collect the money from the buyer, not negotiate, but communicate with the lender to find out what those fees are. It's normally the final loan documents that are signed are usually sent to the escrow company. That's normally where the buyer goes to have those documents signed and notarized. So, they represent and work for both sides, but see to it, just as the purchase contract has the time frames in it for the brokers representing both the buyer and the seller, the escrow company also follows those guidelines and pushes hard to make sure that those time frames are met in terms of being able to close the escrow as the purchase contract states.
Good point.
All righty, well, that was it for questions. Now, I know that, Robin, you have some great news for our viewers, for those who have actually, many of them actually stayed throughout the whole presentation, so I commend you all for doing that. There was great information, but you have some great news for them. Do you want to share that, Robin?
I do. And in our appreciation for you joining us tonight and listening to this, Valley Strong Credit Union wants to offer you through January 30th of 2021, if you are in a purchase contract that comes to our office, we will decrease your interest rate by 1/4%. We'll pay for your appraisal, and we'll also waive your $100 application fee. And we just want to do that in appreciation for you staying here with us, listening to us, asking great questions, and just want to say thanks that you're here.
That's fantastic.
Any last words, Craig?
I just want to thank everybody for taking the time to get the information, and encourage everybody to feel free to give me a call, an email, any questions you might have. I'd be happy to get them answered. And again, no pressure to do anything out of the box or expectations. If it's down the road and it's just 6 months to a year, 2 years down the road, then we'll help you get there. Been doing this a long time, and we'll be doing it a long time from now.
All right, well, thank you so much for this valuable information. We really learned a lot tonight. Our audience has submitted more than enough questions, and I hope that we were able to answer them to your satisfaction. Thank you again for joining us this evening. We hope you enjoy the content and that you leave feeling prepared to purchase or refinance a home. After the end of this meeting, you will be presented with a link to a short survey regarding today's webinar. This is where you can also ask additional questions if you feel your question was not answered in the presentation or simply you didn't feel comfortable asking. Just be sure to include your contact information so someone can reach out to you. We will be sending you a follow-up email following the webinar that will include several resources mentioned in tonight's presentation. So look out for that in your inbox. On behalf of Robin, Craig, and Valley Strong Credit Union, we thank you and have a great night.